The trade conflict between the US and China is still setting the tone for market sentiment. No wonder a risk-aversion mood bolstered demand for safe haven assets. Meanwhile, the only sign of a looming recession in the US is the inverted yield curve of the US Treasuries. At the same time, a lot of macroeconomic indicators reveal stable and even positive trends. What economic data is due in the second half of the trading week, and what do markets expect from these reports? Let's watch a video calendar on InstaForex TV channel. The European economy has been sending worrisome signs. Today we will get to know the flash estimate of inflation in Germany for August. The CPI is expected to drop to -0.1% on month. An annual pace of inflation could slow down to 1.5%. Such downbeat data will be fresh evidence of cooling down in the largest Eurozone's economy and a worsening business climate. A similar report will be presented by the Eurostat experts on Friday. Investors were discouraged by data for the previous month when the CPI slumped to 1% in annual terms, the lowest reading in 3 years. The market assumes that Friday's report will show a flat print of consumer inflation in the Eurozone. This information will remind traders about persistent troubles in the Eurozone's economy. Besides, it will assure the ECB to take resolute measures to resume QE program or introduce a negative interest rate. This scenario will invite the euro bears back to the market and push the European currency down. Today, traders are braced for the second estimate of economic growth in the largest global economy. The US will report on its GDP for the second quarter. The first estimate was beyond the forecast. Now, analysts expect a downward revision to 2%. Meanwhile, market participants are alarmed by a pending recession in the US economy, so they make pessimistic forecasts. If the second estimate is actually revised downwards, the US dollar could lose ground. On Friday, Canada will provide a report on economic growth for June and the second quarter. It reports GDP data every month, so such metrics are more predictable. Experts foresee an uptick in GDP for June. However, an annual pace of economic growth could speed up greatly to 3% in the second quarter from 0.4% previously. If the optimistic forecast comes true, the Canadian dollar will easily regain earlier losses versus the US dollar. Apart from the above-mentioned events, it would be a great idea to take notice of other publications. Today, let's assess data from Distatis on Germany's labor market. The US is due to release its trade balance report. Tomorrow, the market will find out information on consumer activity in Germany, the UK and the US. Each of these countries will report on different aspects which shed light on consumer sentiment. And this was the latest financial calendar on Insta TV. See you back soon.